Yo, what's going on? Happy Sunday, happy Sunday, happy Sunday. Yeah, today you're not gonna be seeing my beautiful face, but it's all good. Happy Sunday. I hope everyone's doing alright. I'm just out here I just want to come and do a little pre-market analysis. It's 10 p.m. my time, so, I almost didn't do it. I was really close to not doing it. I was just gonna get some sleep and then like do this in the morning, but because we did a pre-market analysis video last Sunday, you know, I figured, let's be consistent with that. You know what I mean? So we here just to come and do a little pre-market a little pre-market analysis and also just like mark out my levels for the coming week. And yeah, nothing else to it, my dogs. That's really pretty much it. But yeah, I hope you've had a restful weekend. Mine was pretty uneventful, to be honest. What did I do? I did nothing. I rested like Friday. As soon as like I got out of like that Friday trade, I journaled, of course, because that's what we do, right? I journaled my trade, and then I yeah, I journaled my trade. You know, trades, screenshots, whatever. Closed my motive wave, and then closed trade C. Went to a burner YouTube, a burner Google account where I just like watch random YouTube videos, and because I just didn't want to see anything to do with trading. I don't want to see anything to do with like new strategy. Oh, this is what, you know what I'm saying. I don't want to see nothing to do with trading. So I just like completely switched off, and then yeah, yeah, uh, watched some film and completely disconnected. So, but it is Sunday today, and I feel like my mind's a lot fresher. So we're gonna, yeah, we're gonna do some pre-market analysis and just prepare for this coming week. You know what I mean? Yeah. Friday was quite eventful, though. I'm not gonna lie. Like, there's like a lot of big sell-off there. Big sell-off right from the beginning of, from like London session. Not really London session, but like from like the fourth. Yeah, I'm looking at this on a 1 hour. When was this? From the fifth. Yeah, so around about like London session, just before London session. I am actually lying. I forgot I have like my time as EST. So London session would be my London session would be my 9 o'clock, so 3 a.m. Right? Yeah. So 3 a.m. That's London. Bit of a buy, some buying off London, and then yeah, then we just sold it off. Yeah, we just completely sold it off. Something that I really want to make sure I never miss out on. Again, it's just like the overall context of like the market. Yeah, let's switch everything off. Yeah, let's just get straight into it. I just talking about my weekend and like being disconnected, but um, we at work now. One thing I really don't want to miss out, like I don't want to like forget the context of, right, is like the macro, as I was saying. What do I mean? I mean, see the distance between this candle and this candle? This is called a gap. You get me? This is called a gap. And the market is constantly looking for place. The market is constantly trying to balance, right? It's constantly trying to find balance. All right. What does that mean? Well, you need to think about what purpose a market serves. And the market serves the purpose of facilitating trade. So anywhere where there are imbalances, the market is gonna want to correct that at some point, you know. And this is a gap. This is a big imbalance. You know, this is from a long time ago. This was like from the 22nd. You know, this is from the 22nd of May. And then that was the 24th. So I think this was like over a weekend, right? 22nd must have been, just checking the good old calendar. Um, yeah, 22nd was a Friday. You know, so that weekend. So Friday, this is where it closed, and then when we opened on Monday, it opened higher, right? And then we didn't fill this gap, right? We came, tested it, bounced off it, and then it kind of just like never filled that out, you know. So I was pretty lucky on. I don't lie, I was pretty lucky on Friday because I took this short, right? I took the short from previous week value area low, and because I took the short from there, I was looking, because there were no immediate targets. Like everything that was previous day was above, right? Our previous day levels were above us, and then our Globex session, our overnight values were also above us. So I was like, what do I even target? And I started scrolling, and I was scrolling, and I was scrolling. I was like, oh man. I was like, oh, maybe this level, right? But then we would kind of like hit it already, and I was like, oh, okay. Let me see what else, what and then I saw the gap, and I was like, ooh, that's gonna be pretty important. I thought it was gonna be important, and we did, and and it was, we filled the gap, and then some, So that's what that or, orange. Stimellam samsasezula. Uh, yeah, I live next to a railway. Um, Now I've lost my train of thought. Yeah. Anyway, that's what this rectangle is. So now that we know, now that you guys know, I think I can get rid of it. Yeah. Yeah. Let's get rid of that. I'll get rid of this too. And maybe before we go, maybe before we go into like setting the levels for the weeks and for the week, right? Let's talk about volume profiles. Right? Someone in my Telegram group actually asked me if, they asked me if volume profiles were a confluence, right? Um, yeah, whether they were like a confluence. And it was a pretty interesting question. It was a pretty interesting question for me because like I've never actually considered volume as a confluence, right? Um, like in the same way that I wouldn't consider price as a confluence, it's just data that I read. You know what I mean? So it's like, I guess like maybe a confluence would be maybe seeing. Let's switch on a view app. Okay, any day, any time today. Yeah, so maybe like a confluence would be confluence one would be price above view app, go long, right? And then maybe price above uh price. Yeah, so maybe this could be a confluence, right? I'd say price above view app, okay, blue line, and then price above uh the 20 SMA, the 20 EMA. That's a confluence for it's like two confluences, you know, something like that. But I don't I don't I've never considered the volume profiles as confluences. You know, how I would this is I interpret them the same way I would price. You know, the same way I would price at a certain level. right? The same way you would interpret, say, like this candlestick, this doji candlestick, right? Like, okay, cool. Like in comparison to the previous candle, these are all 1 hour, by the way. But in comparison to the previous candle, we opened in, we had a pretty strong close. We had a pretty strong drive up, right? In that first hour, right? But then in the next candle, we waked up and then, you know, uh, we didn't close at the highest point of price, right? So it's like that's not really a confluence. It's just a way that you'd read, that you'd interpret the data, right? You could assume, you can deduce things. Let's not say assume. You can deduce things from from seeing a 1 hour candle that closes like this, right? And what you deduce from this would not be the same thing that you deduce from the previous candle, right? So um, there are, let's find a nice volume profile. Well, even the ugly ones, I guess, are, yeah, let's just go through all the ones that currently exist on my chart. Okay, so let's start with this one. This is a volume profile on the 28th. I'm gonna switch off the other. I'm gonna switch off the other lines, so that they don't confuse what we're actually looking at, right? So there's no confusion as to things overlapping and all of that. Okay, but yeah, so this is the volume profile, right? Um, I could zoom in. Should I zoom in more, or should I? Let's switch it to a 5 minute, and then we'll be able to see a lot more from it. Oh, I might have actually fumbled that. Man, I think I might have fumbled that. I really should have. Maybe I should have just taken. Uh, yeah, maybe I should have just like taken the time back on the time, you know, on this bar replay. But it's all good. We'll find it. 28th, right? I think this is the one we're looking at. Cool. Uh, I switched to a 5 minute because then we'll be able to see a lot more data from just like the candlesticks themselves. But yeah, so a volume profile. All right. So what do we have? So we have a value area high, okay, which is the dotted line, the red dotted line at the top. And this can change. I mean, you can switch these settings around and make them whatever color you want to make them. It's just like my settings. But so that's the value area high, and this is the value area low, and this is the point of control. Okay, how a volume profile is drawn is the area between value areas. Okay, so the area between the value area high and the value area low, right? Like this area, this represents 70% of all the trading, of all the volume traded between a certain period. Okay, so the certain period is from this time, from 9:30 to 4 o'clock, because that's when I start drawing them. Okay, so on the 28th, this volume profile represents the volume that was traded during the New York session. All right, and that being the value area low, and that being the value area high. Okay, so typically how you'd interpret it is that, well, at your value area low, this is what would be considered as a discount on price, right? And then at your value area high, that's what would be considered your premium, right? So these are like the two extremes. These are the two extremes of volume being traded. Okay, so and then the POC, the point of control, would be where the most amount of volume was transacted, right? Like as much as like this represents 70% of all the volume that was transacted, right? Where the most amount of volume actually happened, that area is the point of control, and that area will be considered fair value. So think of it like this: if there's more volume being transacted at an area, it means that buyers and sellers are uh, are both participating at a price where they believe this is fair value, right? Because remember, it's not a thing of like you have more buyers than you have sellers. Yeah, you have buyers and then you also have sellers. So you have, because a buyer needs to buy from a seller and the seller needs to sell to a buyer, right? So that's what it is. It's just the market in itself, like since it's an auction, right? There are going to be different people. There are going to be different market participants who are going to have um, more power in market movement at different times and also for different reasons, right? I'm reading this book by Jim Dalton. It's called Mind Over Market. Yeah, Mind Over Market. Uh, I like very early on, like he gives an example of a he gives an example of someone who used to trade, who used to be a cattle rancher, right? And because they used to be a cattle rancher, they also understood how like cattle would be auctioned and sold. And so you take your cattle to wherever they auction the thing, and then they start off with a price, right? So they'll be like, okay, just throwing random numbers here, but like say, do we have 50, right? And then if like the people there think like 50 is too expensive, then the person who's the auctioneer has to drop the price because they had, you know what I'm saying? Because they need to sell this beef. You know what I mean? So they're like, okay, cool. No 50. All right, cool. Do we have 48? No 48. Cool. 46. Nothing. 45. Nothing. 41. And then someone bids at 41. Like, yeah, okay, you know what I'm saying? But then like the auctioneer has dropped like the price to facilitate the auction, right? And then the auction would go 41, 41, do I have 41.50, 41.50, 42, 42, 43, 43, 44, 44. And then maybe it even bids like higher than what the opening auction price was, right? Because now everyone's in there and everyone's excited and everyone wants this thing. You know what I mean? You know, and then the opposite would also apply. Like maybe like they get there and then like, you know, he's like 50 and someone is like 50 immediately right there on and then like the auction starts from there and then it just keeps on going high and high and high and high and higher until it gets to a price where it's like, okay, no one wants to bid here anymore, right? Because I've come in with my big bucks, right, at 78, right? Like you were like 76 and I was like 78. I'm saying I wasn't even bidding the whole time, and no one wants to bid above me because it's like, yo, 78 is kind of crazy, you know. And then I get the thing for 78. So it's like basically that's what like this is, you know, low bid, high bid, you know. Except you know, there's a lot more to the bid and that as you know, it's not just like bid, it's bid and ask, right? So this is what moves price higher. Yeah. So all your for price, these people over here are selling. These people over here are buying. Right? You get it? You get it? Yeah. So because if you think about it, if you're buying, right, you wanna buy at the lowest possible price. Right? You wanna buy at you'd rather buy at 364.25 than 364.50. All right. And if you're selling, you'd rather sell at 75.25 than 75. You get it? So, yeah. So that's what this is. This is the ladder. This is what moves price. You know what I mean? This is what moves price. Like when price is going up, it's the buyers over on this side aggressively crossing price, right? So they're like, okay, cool. We know it's at 367, but we wanted at 68.25. You get it? And then it keeps on like that, like that, like that, like that, like that. And these people are buying from this side, they're buying from these people here. These are all sell orders. They're passive though. These are just like there, waiting. It's like when I put a limit order. Someone has a limit order to sell at 84.25. You know, so they're like, yeah, I'll wait. Basically they're like, I'll wait to get filled at 84.25, but this is where I'm selling at. And then they're like even crazy people who are like the auction isn't even at 6:15, but like there's someone waiting at 6:15 and there's someone waiting at 6:20. But if you look at where price actually is right now, excuse me, price is at 367. But there's someone who's like there was like, I don't care, I'll wait. So kind of like understanding that also, and then pairing that with the volume profile now, where it's like, oh, okay, cool. Now that I understand that this is like basically this is a market, right? And this is fair value, and then I can make certain assumptions. Let's not call them assumptions. Then I can deduce certain things from the information that I am reading and from what I am perceiving, right? Um, yeah. So, because this also is a dynamic thing. Like this is moving with, um, this is moving as the market is moving. Okay. So 9:30. So let's do that. This is gonna be in like 5 minute increments. So let's try and follow. It'll make sense. Cool. So this is 9:30, 9:35, 9:40, 9:45, 9:50, right? And then from 9:50, price moves up, right? So we go to the next candle, and you see values shifted, right? The value area high has also gone up. Point of control, not so much so, because still the most amount of volume that's been transacted is still at 7527.75, right? And then we go higher again. Again, our value area high is going higher, right? But our point of control isn't, right? So this is when, like, some of the plays that I'll be looking for, where I'm like, yeah, what, I'll look for a break of a value area and then a retest of it for an extended move, right? Because it's like I see it like people get to value area high, and then at value area high they determine that actually what you thought was premium, what you thought was expensive, isn't expensive enough. Like we can still take this auction higher, right? So and then again, value shift. These blue bars, like they all represent volume. I know it's like graphical, but if I like really really zoom in, you start to see the numbers now. 108 at the bottom, 187, 325, 1524, 2644, right? And then where our point of control is, let's switch off the bars. 5407. Guarantee you I could scroll up. There's no number bigger than that. 5407. This is where the most amount of volume is. So hence that being the point of control. Like this area here. 52750, 52775. That's our point of control. Right? It's like when it's like zoomed in, this is what it looks like. But each of those bars has volume, right? Vertically, they have volume. They represent volume transacted. Might be overcooking this explanation. Maybe I didn't even have to. Maybe that was already inferred, but uh, you know. So not a confluence as you're seeing. Like I'm reading the data, right? I'm not so much so reading like each bar, right? But then there's like significance to it. Like wait and see when the point of control shifts, right? Which is probably gonna be around maybe after this. Okay, maybe before we get there, let's do this. to also talk about another core concept. So now we have this like really massive, expansive move up, right? Yeah, and this is like 10 o'clock, 10 past 10. We have this super expansive move up. Could have been anything. Could have been a news thing. Could have been a war thing. Iran agrees to. Donald Trump says, I don't know. Anything could have happened on this day, at this hour, at this time, right? Cool. But then there's this expansive move. And every time there's like these expansive moves, what you have is you have on the volume profile very little volume in those areas. Very little to no volume. See 143.99.57. You see, like from our point of control, what we were talking about 5,400, right? So this is like these are called low volume nodes, right? Because there is low volume there. And those low volume nodes are caused by price moving past areas. Like these are areas where participants, like basically think of it like this: like no one wanted to transact here, basically. Like buyers and sellers didn't want to transact here, so the market went higher. That's what it is. Um, that's how. That's the basis of a low volume node, right? Uh, yeah, I know my ICT people are calling this a fair value gap. Where is the fair value gap? They're saying this is a fair value gap. You know, that's the ICT thing, right? That's a fair value gap for this area. And it's like, yeah, it's a low volume node. You know, more specifically, like you can see the low volume nodes, you know. Um, and I know this is a very popular strategy in like ICTs. I remember I used to trade this myself. You find a fair value gap, and then you wait for the retest of it, and then and like the logic behind it basically is, the logic. The reason why it works is because of volume. It doesn't work because it doesn't work because it's a fair value gap. It works because there's little to no volume at those areas. You get it? And this is represented now to be really granular since we want to draw them out, right? Like this is our fair value gap, quote unquote. This is a low volume node. And this is where price didn't want to transact past, right? You can see it was like represented even aggressively on the candle itself. So not a fair value gap, but a low volume node. Okay. And then of course, like where you have your low volume nodes, then you also have your high volume nodes. And your high volume node are these peaks. Yeah. See, that's volume node, right? An HV and a high volume node, where there is a lot of volume being transacted, and price is normally drawn towards those areas, right? Because price has memory. If market participants like transacted somewhere before and they had success, the market is gonna go there again, because again, remember, like the whole purpose of this thing is to facilitate trade. Like there's nothing else. There's nothing else beyond that. There's nothing else to it. There's nothing more to it. There's nothing. The whole purpose of this is to facilitate trade. Without trade being facilitated, there's no purpose in the markets. You know, that's that's why they exist. They exist to facilitate trade between buyers and sellers. You know, that's essentially what it is. You know what I mean? So, and how trade is facilitated is in this way. Um, we go from areas of since we're using volume profiles, right? Let's represent it using volume profiles again. We represent, we hold on. We facilitate trade by going from places of balance, right? See, this is pretty balanced. You get me? Balanced, even like when you're looking at the volume profile in itself, right? balance, right? Balance. Balance meaning what? Meaning, we're gonna have buys from the bottom, sellers at the top. This is the market spends most of its time doing that, rotating. Yeah, what people call chop. Like, I don't want to be in this particular market condition because it's chop. And it's like, no, that's the market. The market is doing its job. That's what it's supposed to do. All right. So we go from balance, right? And then uh when we want to find new balance, we have to first go through imbalance. This is this extensive move now. Yeah. This this expansive move, right? And we do that until we find a new place of balance. Yeah. Now we've got that expansive move, and then after we get that expansive move, what do we get? We get balance, right? Facilitate trade again. There we go. And then after we do that, what do we do again? Same thing. Expansive move. And then after we've got that expansive move, what do we do again? Balance. You know? And depending on like how wide your lens is, right? Certain things might look like balance and certain things might not look like balance. But volume profile will show you. You know what I mean? In fact, like even if you don't like throw a volume profile on it, if you just like look with your naked eye, you'd be able to see balance and imbalance, balance, imbalance. You know? Um, yeah. So that's like pretty much that with like volume, and I think just kind of for me mentally, just getting drumming that in, right? Just like constantly thinking of trading in those aspects, in the aspect of, well, this is about facilitating trade. That's what it is. I just need to be able to read the data that I am seeing, right? Not assume, you know, not not front run it, say, oh, because of this particular calendar event or whatever, this is what's gonna happen. Nah, I don't care. Uh, I don't care. Trump can tweet 3 times in a row. As long as I'm not in the trade, I'm good. Hey, give me. But yeah, I mean, like in all honesty, um, it doesn't matter. You know what I'm saying? At least to me, it doesn't matter. Why doesn't it matter? It doesn't matter to me because like I'm still gonna read the volume. I'm still gonna read the data that the market is presenting to me. That's how I'm gonna trade. That's how I'm gonna make sense of all of this because this stuff looks confusing as fuck. You know, shit is confusing as fuck. You know what I mean? It's like there's so many things to learn, and you know what I'm saying. And yeah, it's like, yeah, the technical is one. The technical aspect is like important. It's just as important. It's like understanding the technicals is important. You know, but like once that's done, then the rest of it is discretion. Because again, like you could go into the market Monday, Tuesday, Wednesday, Thursday, Friday, and just like toss a coin. Just be like, today I'm short, and then just like, short. You just sell. You're like, yeah, and I get to here, I'm just gonna sell, and you'll probably have some luck. You know, um, you know what I mean? Because that's what it is. It's like 50-50. Everything is just, you know, you could win or you could lose. You know, it's all your discretion. It all comes down to your discretion. But now it's about like, well, why? You know what I'm saying? Now it's about like finding the probabilities, right? Like, ooh, what has the highest probability um, of success, right? What is the highest probability of success? You know, um, yeah. I always used to hear this. I used to hear this, and I never really quite understood it until it happened to me. Where someone said, "You haven't traded long enough until you've either sold the bottom or you've bought the top of a market. I didn't get it. I was like, "Ah, that's dumb. Like, why would anyone do that?" Until I fucking did it, and and I felt the pain. And that's when I then fully understood them. I've then fully understood like mark auction market theory, right? Like this stuff that I was describing to you, right? Where uh, what does buying the top mean? Buying the top means like right before, like right before this move here, like you see that like large this 1524 candle, right? Like you're here, 607. You're watching, you're like, okay, 607. It gets to 610. You're like, surely 620. And then you buy 610, right? To target 620. And immediately it reverses, you know? Like, not even like it reverses after like 2 minutes. Nah, it reverses when your limit order goes through. That's when it, or your stop order, whatever, that's when the market reverses, you know? And I've done that like I've done that on both ends where like I was the last one I was the last one to buy. Maybe not necessarily like the very last one in the entire market in the whole world, but like buying the very top and then reverses and then selling the very bottom and then it reverses on two consecutive days. You know, understand? There's like there's certain things that would give you context, right? Like now, say looking at a volume profile, if you're coming around here, right? If you're getting to, let's drag you back a little. Okay, cool. So we see this is our point of control, right? So point of control, cool, 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 cool. We've been moving around here, and then we get a break, right? We get a break of our value area high, right? We get a break of our value area high. So I just want to be able to move this a little. We get a break of our value area high, right? And now you're waiting for the retest of this, right? And you get the retest, but then all of a sudden after that, what happens? Your value area goes higher, right? Your value area high goes higher. And then on top of that, you don't see any volume at the very top of this volume profile, right? Like you're also looking at this volume profile, like actually what's going on here? And there's nothing that's showing you that like, oh, there's gonna be more transactions at the top, you know? Um, and I mean that's like a hard thing to call, right? Because that was like pretty clean. We're always looking for breaks and retests, but now all of a sudden, what is a value area high is not the value area high anymore, and then you didn't get any confirmation from the volume profile that there's acceptance of price higher. You know what I'm saying? And that like participants want to continue auctioning higher, right? You know? And if you're like super super ambitious, you're probably like setting, a stop like this. Maybe you're like, let's call it 630. Maybe you're targeting 630, and yeah, your stop is at 600, right? Which doesn't look like a bad trade idea, right? Doesn't look like a bad trade idea, but again, when I'm like when I'm using the volume profile, like I'll look at it and consider where side of the furthest side of the volume profile is, right? So what do I mean? I mean, if I'm entering at a value area high, then my trade idea gets invalidated if price goes to the value area low. So for me to even participate in a trade like this, like my stop loss would have to be here, because essentially my um this is where my trade idea would get invalidated. That's one way of doing it, right? The other more quicker way of doing it would be invalidating as soon as it gets to the point of control. Because if we're getting a break and retest of a value area high, then we shouldn't come back to fair value, right? If we're gonna have this expansive move, then we shouldn't get a failed expansive move, right? Probably the best way to do it. Or putting your stop at a high volume node, right? And it's like, okay, cool. Maybe we fail below this, and then this is like my ultimate invalidation point, you know. Um, outside without this, like, there's no how would you even place this trade? You know, how would you how not place the trade, but like how would you even place your stop loss? You know, it may be like using an ATR, maybe using that. I'm not saying that the volume profile is the only way of setting stops. Um, you know, or that there is no other way of like determining your risk, right? But having a volume profile on, um, and being able to interpret the data from it, of what you're seeing, it does go a fucking long way. I ain't gonna lie. It goes a really, really long way. So, uh, yeah. I think I've been yapping for a very long time, yo. I've been yapping for a very long time, and I've just been talking about the exact same thing. I've just been talking about the volume profile. I could go on for days. I could go on forever. Maybe let's not go on forever, but uh, yeah. But that's the volume profile. I mean, yeah. I think maybe if we could speak some English, that would be fantastic. It will probably go better if like I'm asked questions, like specific questions. I think I answered that one with the confluence, but um, you know, I'm sure there's like a lot more questions that like people might have and might want to know. You know, things that people might want to know. So always open to it, of course. You know, so yeah. Um, you can drop them in the comment section or whatever during the live. You know, tomorrow when we get live. So no biggie. Let's mark out. Yeah, let's do our pre-market stuff now. Mm? And then we'll wrap up this video and we'll go to bed. Oh, I'm gonna sleep so nicely. I ain't gonna lie, I'm gonna sleep so nicely tonight. I'm genuinely feeling it. But yeah, so this was our these were our levels from the previous week. Right, this was our previous week. Let's mark it up. Point of control, value area low. Cool. So this was our previous week. Value area high, point of control, value area low, right? And from Monday, we were above it like throughout Monday. Looks like, yeah. Even from open, yeah. It's pretty interesting. Yeah. So from like our New York session, we were above it, and then we came within it. This was on Wednesday. This is Wednesday. We did trade a little within it. On Tuesday, we were also above it. I mean, from like 9:30, we did test it. We did test it, and then we went above it again. We spent some time above it on Tuesday, and then on Wednesday. And on Wednesday, we spent quite some time within the previous week's value area. You know, actually got the full rotation, right? From value area high, and then, you know, did I look above and fail? You know, look above, fail. And then we rotated right through the previous week's value area low. So that's actually pretty interesting. You know, that were like below the previous week's value. There's also that gap which we also filled, and then some. You know, we filled that gap and then we continued going lower. Yeah. Uh, Nothing more to it. I don't know. Uh, I don't have any. I don't have anything like pretty significant to add to that. I mean, I did see something that was kind of interesting regarding uh, the 5 year, inflation numbers in NFP and the 5 year bond, 5 year bonds, the US yield bonds, right? And then apparently, basically, what happens is um, sometimes these companies will move their money from one asset class to another, and to whatever asset, to whatever asset class pays better, and it just so happens that because of the NFP numbers, uh, yeah, because of the NFP numbers, employment is up, and because employment is up, there is more incentive for these companies to lend the government money because they get 5% or more, or whatever, back from whatever they lend the government. So, hence this drop. If you look at the US yield, which I did, can we see yields here? I wonder. No, doesn't look like it. Nah, we only have futures assets, spreads. Nah, it's all good. You guys will just have to take my word for it. Or go and check for yourself. But yeah, but apparently that's what happened. So that's why we had that drop after NFP. Uh, NFP is non-farm payrolls that happened at 2:30, 8:30. I need to start using uh, this time zone. So that's 8:30, right? NFP numbers dropped. That's the candlestick. And then with yeah, we're gonna have a little momentum, and then we dropped again, and we dropped again. So yeah, that's what happened then. But yeah, I guess that's like the most significant thing I could mention. This is okay. This volume profile can go. Yeah, cool. I think these are going to be our. This is going to be our. This is going to be our previous day volume profile. We're going to mark out these levels in a little bit. Let's just hide it for now. Yeah, let's just hide it for now. I just want to make sure that there aren't any levels that are repeating. Yeah, because who are you? Oh, yeah. I remember I drew this out. I drew this out using only regular trading hour data. So marking the previous week, I'll show you. Marking the previous week's um, value areas using just regular trading hours. So that would be, I basically would switch my chart to only, to not show extended session. Cool. And then I would, so now this is like 9:30 to 4. You see 9:30, that's 9:30, so the chart just goes 9:30, 9:30 to 4, 9:30 to 4, 9:30 to 4, you know. So yeah, I was kind of like experimenting with that. Don't really like it because I think these levels are pretty strong. And as much as say Globex session is not, there we go. As much as say Globex session is not, the main session, right? Not just Globex session is not the main session. It still carries important data. You know, like knowing where the Globex participants were is significant. Is somewhat important. You know, but do what you want. But yeah, I would I would use Globix if I were you. You know, so yeah. So now we're just gonna try and find where this market opens, dude. Oh, I don't like that. I think on the 1st of June, I was still using CAT. So now, yeah. So now I kind of feel like I'm not entirely sure when the 1st of June is, because I mean, that's the first. Okay, we'll mark it from here. It's just me overthinking things, not on FTV. So we'll mark it from there. We're gonna draw this across the entire week. I just need some runway. I just need some runway. So from the 1st of June, right? So from the 1st of June till literally the very last candle on the last day. All right. So from the 1st of June to the 5th of June. All right. If you're looking at it from the calendar, 1 week. So 1, 2, 3, 4, 5. These 5 days. That's this volume profile. You get it? And this volume profile that we just drew out now. And to confirm, we're just gonna highlight it and click on that. So yeah, so 01 June to June 05 1655. Okay. And then let's switch on the time, the not the time, but the let's switch on the values, right? The labels on the value areas, so we can so we can put so we can match the right value area to the right label. Okay. Sorry guys, it's like it is 11 o'clock my time, so uh yeah, I really want to sleep. I'm not gonna lie, I really want to sleep. Oh, there we go. Apply. Update 629.50, and then 624.50 for the point of control. 624.50. There we go. And then 502.75. Update. Cool. 502.75. There we go. So this is our previous week levels. These are our previous week levels. All right. Cool. And now that we have that, we are going to hide you, and then we're gonna bring back the previous day. Right, the previous day. What we're going into Monday, so the previous day levels are gonna be Friday's levels, right? Why? Because we're going to Monday, all right? We're going to the 8th, all right? The previous day is not Sunday, because Sunday is not a trade day. Saturday is not a trading day. Friday was the last trading day. Okay, so that's the previous day on Monday. And again, we're drawing it from 9:30 EST to 4 p.m. EST. Okay. Yes, mark it out, enable it, update. Yeah. So we are going to bring that back on. Previous day value area high, PDVAH. What is that? 553. Update. Point of control. What's the point of control? 465.50. All right. 465.50. That's a massive drop, though, I ain't gonna lie. It's a big drop in POCs. 422.25 for the value area low. 422.25. Yeah. So these are levels. Yeah, and I think we can hide this. We don't need this anymore. Cool. So what can we deduce? What could we establish from this? Let's switch to a 1 hour so we see more of the charts. Okay. Since these are gonna be our levels for in the coming week, like what can we make of this? Yeah. So for one, we know that our previous day levels are lower than our previous week levels, right? At least our point of control and our value area low is right. Okay, so if we do start a trade within the previous day value area low, right, then we can expect a full rotation to previous day value area high. Okay, but I personally wouldn't want to see that during the Globex session. I would like to trade that within the New York session. So our Globex session is gonna start at 6. Globex session is gonna start. Yeah, so let's call that 6 o'clock, and then we are going to our session is gonna start here. All right. So, from here to here, I would much rather see price below the previous day value area low, even if it's just like continuous rotation. Because I don't trade Asia session, I don't trade London session, so I would like to see, maybe 1 or 2 tests of previous day value area low, and then during our session, I'd like for us to break the previous day value area low, and then we can start targeting, all of these levels, and we can target previous day, point of control, and then whatever we get the next day. Because then the next day on Tuesday, whatever value we get from Monday, then we'll target that, but slowly targeting, trying to move towards the previous week value area low. If we could rotate back up, that would be fantastic. My edge actually is more in is better in longs than it is in shorts. So yeah, and also because I ended the week profitable, Monday is gonna be a difficult day for me, historically, and also with data. I usually start the week red, and then it's like catch up and trying to fix it, So gonna need to be like super aware tomorrow when we enter the market, and but yeah, nothing more to it. That's really what I'm going to be looking for. But still, either way, even if we do rotate lower, I mean, I don't see any massive gaps to fill. Anything that's there to fill kind of has already been filled. Yeah, you see, that was filled. Getting back into the 6,000s would be crazy, though. I ain't gonna lie, that would be crazy business. But yeah, I mean, we're only in 6,000s in April, so it's not like too far fetched. It wasn't like too long ago, also. But that would be a crazy drop, though. Considering we're in like in the 7,000s, that would be a massive drop. So, uh, still there. Can't like rule it out. Can't rule it out. But if that's what we're gonna have to trade, that's what we'll have to trade. We'll throw on a view app. We'll throw our view app on. Throw a view app on. Just that it's on the chart for the session, and we'll leave it at that. Once that loads, whenever it decides to, I'm sure it'll present itself at the right time. But it's so late. It's like it's 11 o'clock, and I've been here for an hour, so I think I've filled my quota. I've filled my quota. Yeah. I think that's pretty much gonna be it for me, yo. I don't think there's anything else I wanna talk about or cover. Yeah, I just really want to sleep. I really want to get some rest and come back to the market ready and fresh. Ready and fresh. You feel me? Yeah. All right. Well, this has been fun. No, it has. It's been all right. You guys haven't been too bad. Make sure you like, comment, and subscribe. Drop me a comment. Ask me a question. Join the Telegram group. Just join the Telegram group. Don't be that guy. Don't be that gal. Join the Telegram group. Drop me a message. Ask me a question. Let me know what you would like for me to have a look at. What's not clear. I'll try and explain things also during the live, which we're going to be doing again tomorrow at 15 my time, at 9:15 EST. Okay. I'll catch you guys then. Yo, yeah, I'll catch you guys then.